Hey everyone, and welcome to today's Explainer. So, we're going to look at a company that is quite literally keeping the modern tech world ticking. You've probably seen the massive waves made by all these AI infrastructure stocks lately, but today, we're taking a look under the hood. We're going to check out the absolutely essential component that makes high-performance computing even possible. We are breaking down SiTime Corporation's explosive Q1 2026 earnings. They are really the hidden heartbeat of AI. Okay, let's dive right into this. Here's our roadmap for today. First, we'll look at the Q1 earnings blowout. Then, the AI infrastructure tailwind. Third, how they're expanding the empire. And finally, we'll cover Wall Street's verdict. All right, moving to part one, the Q1 earnings blowout, crushing expectations. Let's just start right here. When a company is operating at the absolute center of an AI boom, expectations are, well, they're astronomically high. But 88.3%, that is SiTime's staggering year-over-year revenue growth for the first quarter of 2026. I mean, in the hardware space, seeing top-line growth pushing 90% for a massive established company, that proves the adoption of their product is just accelerating at breakneck speed. They didn't just meet expectations, guys, they completely shattered them. And this brilliantly illustrates what that percentage actually looks like. Just to put it into perspective, back in Q1 2025, revenue was sitting at $60.3 million. Fast forward just 12 short months, and that top line has ballooned to $113.6 million. That completely blows past the consensus estimate of $105.5 million. It is a huge jump that clearly proves demand is scaling rapidly.
But it's not just about selling more products, right? It's about doing it efficiently. Their non-GAAP earnings per share came in at $1.44, easily beating the $1.14 estimate. But what's even more impressive? A non-GAAP gross margin of 64.5%. Maintaining margins that high while scaling your revenue by almost 90% is incredibly difficult to pull off. Add in an operating cash flow that's up nearly 69% year over year, and what you're looking at is a fundamentally cash-generating machine.
To really understand why this financial explosion is happening right now, we have to listen to Rajesh Vashist, SiTime's CEO. He said, as AI infrastructure and high-performance systems grow, precision timing is becoming a system-level requirement. He also pointed out that their differentiated platforms are driving higher average selling prices and margins. So this isn't just some general tech growth story. It's a specific, systemic need for exactly the kind of hardware SiTime builds. Which brings us to Section 2, the AI infrastructure tailwind beyond legacy quartz. Okay, so to really grasp the value here, we need to quickly talk about the underlying technology making them so indispensable. It's called MEMS, or micro-electromechanical systems. Basically, every single electronic device needs a clock, a heartbeat to synchronize data. Now, for decades, that heartbeat came from cut quartz crystal. But SiTime? They replaced that quartz with silicon-based programmable MEMS. They are manufacturing the highly precise, ultra-reliable heartbeat that today's super-complex electronics absolutely require. When you see the two side by side, this massive industry shift makes total sense. Legacy quartz crystals are non-silicon, and they really struggle in harsh environments. They're super susceptible to vibration and temperature changes. On the flip side, SiTime's MEMS offer massively enhanced reliability. We're talking shock-resistant, a much smaller physical footprint, and far more power-efficient. And let's be real, you simply cannot afford to have a multi-million-dollar AI server crash just because an old-school legacy quartz oscillator failed under pressure. No way. So the crucial point here is how this technological superiority translates to market dominance. We are seeing demand across the absolute fastest-growing sectors on Earth. We're talking communications and enterprise networking, hyperscale AI data centers, advanced automotive computing for self-driving cars, and highly complex industrial automation. All of these sectors require extreme precision and rugged reliability. These are massive secular tailwinds, and they are blowing perfectly into SiTime sales. Let's move on to Section 3, expanding the empire, capital, and acquisitions. Now, what's really interesting here is how management is leveraging all this momentum. They definitely aren't just sitting back, they are building a fortress of a balance sheet. Looking at the Q1 2026 numbers, they're sitting on nearly $498 million in cash and equivalents, plus over $290 million in short-term investments. So you put that together, and their total liquid cash position is an incredible $788.66 million. Having almost $800 million on hand provides ultimate flexibility and a highly competitive landscape. And they are putting that flexibility to work right away in a strategic 1-2 punch. Step 1. They recently upsized a convertible senior notes offering to a staggering $1.2 billion. They are building an absolute war chest of capital. And step two, they're using that strength to acquire Renesas Electronics' timing business. This is a brilliant move because it's not just about buying up revenue. It's about instantly adding complementary products, things like clock generators, network synchronizers, and jitter attenuators, to their own portfolio. Because there's very little overlap between the two businesses, SiTime can now cross-sell a complete end-to-end timing solution to a much wider customer base. It's a real game changer. Finally, let's wrap things up with Section 4, Wall Street's verdict: bulls, bears, and insiders. So, with explosive revenue growth, a massive war chest, and a major acquisition on the books, how are the markets actually valuing this company right now? Well, the sentiment from major financial institutions is heavily skewed toward the bulls. Right after this earnings report dropped, Barclays upgraded the stock to overweight with a massive $850 price target. Needham maintains their buy rating, also at $850. Goldman Sachs reissued their buy rating with an $800 target. Now, there are a few dissenting firms, which gives us a moderate buy consensus and a $661.88 average target, but clearly the heavy hitters are projecting significant upside. They're grounding the AI hype in very aggressive price targets. Let's move to the ownership data and see how this builds out the picture. This bullish sentiment is reflected directly in who holds the shares. A massive 84.31% of the stock is currently owned by institutional investors. Hedge funds and major players like Federated Hermes and Emerald Mutual Fund Advisors have been actively accumulating tens of thousands of shares in recent months. The smart money clearly wants a piece of this MEMS revolution. But, of course, we always have to look at the other side of the coin. While institutions are buying up shares left and right, we've seen quite a contrast with corporate insiders. Over the last 3 months, insiders have actually sold 11,900 shares, which is valued at nearly $5.7 million. Now, it's very common for executives to take some profits when a stock is trading near all-time highs, and insiders do still own about 1.4% of the company. Still, it's a vital piece of data to keep in mind when you're building your thesis. Which leaves us with the ultimate question. With an 88% revenue surge, unmatched MEMS technology powering the AI infrastructure boom, and a massive war chest for future acquisitions, the growth story here is totally undeniable. But with Wall Street setting sky-high targets and company insiders taking a few chips off the table, we really have to ask, is SiTime's revolution already fully priced into the stock? Or is the heartbeat of the AI economy just beginning to speed up? Thank you so much for joining me for this explainer, and I'll see you on the next one.